The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the March 7th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and grateful for your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential, folks, that is what it's all about. And a great way to kick things off each day is with an attitude of gratitude. No question about it. So question for you. Do you awaken every morning full of appreciation for the life that you live each and every day, or do you have to think long and hard before finding something to be grateful for? You know, I love the emails that I receive from listeners each day. I am really grateful for them. Keep those cards and letters coming. Oftentimes, yesterday included, a listener asked me, how is it that I find my passion in life? How do I find direction? How do I find what I call strong reasons why out there? And the answer, it's simple. It lies in one word, folks. It lies in gratitude. The real question is what that each of us, I think, should ask is, what is it that's in my life right now that I am grateful for? Or what is it that I could be grateful for? What is it that you're taking for granted? Folks, what you want to make sure that you are doing is that you want to focus on everything that you're grateful for. You want to write down at least one or two things right now. In fact, each of us that have these smartphones out here, you've got those little memo pads. At least, certainly if you've got an iPhone or an Android device, they've got that little memo pad. And you should have your gratitude list right then and there. Because I promise you, the world, just simply the way that it works, it's going to throw you a little twist and a turn here and now. And what you want to make sure is that you're always coming from a place of strength. And the easiest way to get to a place of strength, well, first you want to just simply stand up straight, tall, put those shoulders back, but you want to be able to change your focus. And instead of focusing on the fear, folks, you want to focus on what it is that you're grateful for. Oftentimes what stops us from taking action is the attempt for the standard of perfection, which, as you know, it's the lowest standard on the face of the earth because perfection just simply doesn't exist. Outstanding, that is what we shoot for. Extraordinary, those are the rewards that we're looking for. And if your standard is to be outstanding or extraordinary, well, I say taking massive action is really a simple thing to do out there. An attitude of gratitude, folks, that is the way to start your day. In fact, when you are grateful, what happens in life is fear disappears and abundance appears right in front of you. An attitude of gratitude, folks, I promise that it will work for you. Let's go take a look at these markets. All the bulls have an attitude of gratitude. We've got the Dow up another 44 points right now out at 14,340. Composite up 2. S&P up just under 2 points out at 1543. Russell 2000 up a point out at 931. Google's up 75 cents. Apple, though, we'll go peek in on Apple. That's down about $4 right now. 421.70. Pop into the upside. You've got, Artesian Partners. I believe that's an IPO today. APAM is the ticker symbol. We won't spend time on that. We're going to look at Navistar. Navistar International. That's up 23%, and that is trying to break out of a consolidation area. So we'll peek in on that stock. Mountain Vale Resorts, MTN, is the ticker symbol. They're up 6%. Vale, what a beautiful place. Vale Resorts up $3.43. You've got Immersion Corp. Nothing like immersing yourself into what it is that you want to be able to accomplish in life, folks. IMMR, that's up 40%. Well, let's see, what is this here? What do they got going on here? Immersion has surged to a new high on some Samsung news, so some type of licensing agreement. We're going to go. That is breaking out big time, up 30%. Boeing up 3% today, up $2.60. To the downside, there you go. Intuitive Surgical. Our man Mike in Lakeland must be having a good morning. He's grateful. He's got the puts on this, so that was Intuitive Surgical. Maybe we'll peek in on that stock as well, so that's down a nice. That's leading things to the downside. You got Netflix trading off about 3% today, down about $5. PetSmart having a bad trading session, off of about $4.45. Apple, we mentioned earlier. DaVita Inc., DVA, that's one of the, or had been, one of the high flyers inside the IBD. Don't know if it is anymore. DVA down about 3% this morning. Our call number is 877-927-6648. Let's start off by taking a look at the indexes, though, the ETFs, and then we'll go peek in on some of these stocks here. We've got the S&P 500. You can see a little bit of a rising price channel. This is a shorter-term one coming off of the November 16th lows out there. And what we can see here is the S&P really wants to get up and tag the top of that rising price channel. We take a look at expansions of swing points. We've been through this, the September 14th low down to the the September 14th high to the November 16th low. What you've got is at 1555 is you got the 1.618 expansion area of the S&P 500. Would make sense to me that would want to spike that. Shouldn't have too much difficulty climbing up there. It's not like that's Mount Everest. It's at 1543.72 right now. 1550 should be some pretty decent resistance. So, you might want to just have your seatbelts on, because as you're a pilot here for the next, looks like 48 minutes, I would say you want to make sure that you got your seatbelts fastened because you are going to run into some turbulence out there. Let's go peek in on some of the other indexes here. Let's go take a look at the Dow. We've got the weekly chart here on the Dow. Dow trading up well above that 14,198. So you got a real breakout session going on here. I think I caught just a tad of Larry's show yesterday, and he was showing a 3 drive to a top on the weekly chart, I believe. Let's go take a look at that here. I don't have that drawn in. I certainly can see the pattern out here. And, it's making you've got a nice set of expansions here. Take a look at this. You've got a 1.272 expansion. This is the weekly chart going from your May 4th high to the high that was established on October 5th. The Dow has a little bit slightly higher high on October 5th, whereas in the S&P, it's September 14th where the high is out there. So you have a nice 1.272 expansion, and you've got a 1.618 expansion off of that October 5th high to where we're trading at really right now today out there. So, there is some resistance. This is the weekly chart of the Dow. No reason to go start peeking back into the left-hand side of the chart. Now, somebody asked, what would a failure be? To me, a failure, folks, would be for the Dow to get back inside the swing point, that 14,198. When you break an area of resistance, which you can say is, we can say that the October highs, the week of October 12, 2007 highs, we're going to say that was the area of resistance. It wasn't tested. You'd like to have an area that was tested out here. But if the Dow slips back and pulls back, now, when you break an area of resistance, what happens is the market wants to come back and test it. And by testing it, means a pull back to 14,198. It would be no big deal. As long as 14,198 holds, then that's what the bulls want to see. Gets back inside there and says, okay, now where are you headed to? If on the weekly basis, because that candle is so narrow, you get below 13,950.25, and what that's going to represent a false breakout, and that's just as simple as that. And when you can't bust it up, what's it going to do? Goes and busts it down, and on the weekly chart and the daily chart, everything really takes you back into that November 16th area, at least a retracement. And at least a 0.618 retracement of that. But not until that time, not until the bulls or the bears show up, do you have to be paying attention to that. But it's an easy area to be able to benchmark. That's the weekly chart. Let's go take a look at the week or the daily chart here. Let's take a look at the New York Stock Exchange. New York Stock Exchange now breaking out. But what the New York Stock Exchange is really doing, right at the 9,008 level. In fact, let's go measure what the exact. Not that we use exact numbers around here, but let's go see what the exact number of the 1.618 expansion is, because there's two butterfly sell patterns. You've got one that's taken us back into the March 20, 2012 time frame, the high out there, 82.52, down to the lows that were placed, put in on June 4th, and 90.10. So 9010 is the 1.618 butterfly expansion of those swing points. Right now, you've got the New York Stock Exchange trading out at 9,016 out there. So really still inside that range. There was a smaller 1.618 butterfly that created a little bit of the initial pullback here in the middle of February. And that's what the New York Stock Exchange is doing, moving higher on less relative strength. Never a good sign out in a marketplace. Let's go take a look at the NDX 100. NDX 100 here being obviously pulled down by Apple because of the weighting inside the NDX. The NDX right here, really you're taking a look at two Gartley sell patterns. We're going to get rid of the one that's actually in yellow right now. We can replace that because that area is simply with price gapping up above that level. And it was a nice 1.6 range. It stopped price, which is kind of interesting. Not really interesting. And it's why you want to use your expansion tools, your retracement tools, and make sure you're able to identify swing points. And the swing points that you're always looking for are those major intersections out there. In the case of the NDX 100, the major intersections, pretty easy to see. I think it's the December 19th high out there, 27.13, all the way down to lows put in on December the 31st. And there was a 1.68 expansion of that. What do I mean by that? I mean, if you take the high of December 19th, if you take 27.13.39, and on your calculator, you subtract the low of December 31st, 25.98.57, get that number, multiply it times 1.618, add it now to the bottom here of December 31st. It's going to take you right up into this 2780 area. Now, my system here is rounding a bit, so you might have a little bit different number, but it's really right around that range, within a buck or two. And what you'll see is what we can see is that is what stopped price for a tad. Stop price in the NDX 100. Now with the NDX did, we're going to go ahead and erase that because that really no longer is in play from my standpoint. And if we take a look at it, you've got the larger 0.786. Now, Gartley's sell pattern. Let's actually go back here. We're going to take a look at it because you may not have the same tool. Most of you. In fact, I don't know if this tool is available on anything other than inside Ensign Windows out here. But the tool that you do have to be able to identify and draw those areas are your retracement and expansion rulers. And if you go from the high of September 21st, that high is 28.78, all the way down to the low of November 16th, you'll see that at 27.96.20, that's your 0.786 retracement out there. And that, in essence, you did get the NDX got closed just slightly above it at 27.99 on March 5th. Yesterday, now it's not a bearish candle, really, that we have. We don't have a bearish candle signal here in the NDX, at least not just yet. In fact, he had a bullish signal. Yesterday was a gap up. Yeah, how much stronger can you get inside an equity? Gaps are very strong out there. And so the NDX here gapping up right now today, just having kind of an inside day out there. And if we take a look at an A to B equals CD pattern here coming off of the low on November 16th up to the high on December 19th, all the way down to the low of December 31st, you can see 28.17 was the one-to-one A to B equals CD. Does it have to get to 28.17? No, I think 28.08 is good enough. You can be 9 points away and still qualify as completing your A to B equals CD pattern. But it's got some good support here. It's got good support. You got that gap up, and so yesterday's gap up, untested. We know an area that is really strong with regard to support in the NDX, and that is the low of January 2nd out there. That, folks, is a strong support area. That day, you had the Qs move up with 70-some million shares. In fact, we'll go peek in on the Qs when we get back from break, see what kind of volume was behind the gap up from 2 days ago. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow up about 39 points right now. Composite pretty much flat, up 43 cents. S&P up $1.50. Small caps up 90 cents or so. And as we peek in on the Qs here, just to finish off taking a look at that, now we're going to go take a look at two of the top holdings inside the Qs. We'll go take a look at the at Apple and Google. What we can see is that gap up from two trading sessions ago, 35 million shares out there, getting up over an area. What it was really going into here, let's take a look at this. It was finding some resistance right here, a little bit of a gap down on October 5th. If we take a look at it, the low of October 5th out here is 68.80. The high of the next trading session, 68.72. So we need to draw a line across the screen here. We'll go ahead and we'll put that in red because that is now a tested area of resistance inside the Qs. And it's that little open window that you've got out there. And that's what those gaps are really so good for, is being able to identify areas of support and or resistance. Now, we know we've got a really great area of support here in the Qs, and that's the gap up from January 2nd. You can see 70 million shares on that trading session. The Qs tried busting it down so many times. It tried on January 7th, on January 8th, on January 15th, on the February 4th, on February 21st. Actually broke through just slightly, closing below. When I say breaking through, you can see some tests. You can see that you've got some shadows that are, where intraday it closed or it moved below it. But all of the tests, with the exception of really the session on February 25th, and it only closed just slightly below it. And, that signaled a false break to the downside because the next day came right back inside that 66.48, I believe it is, 66.48. So a really strong area of support here is the low of January 2nd inside the Qs. Now, when we take a look at resistance out here, really it looks like setting up the consolidation range is going to be this high here, which is the low of the gap down from October 5th. That number is 69.80. Might be setting up a nice little trading range out there, and that is on your Qs. Now let's go and take a look at a couple of stocks inside the Qs that move them along. We'll take a look at Apple and Google. And then we'll come back to Smithfield because we got the weekly chart, and we can see that is in a trading in a sideways consolidation area as well. So as we take a look at Google, we'll start off with Google first, and Google here today trade out at 831.11. Now Google gapped up on March the 5th, 2 trading sessions ago. Does it with 4 million shares. Backs off yesterday with 2.8 million shares out there. Now, as you can see in taking a look at the actual stock chart, or taking a look at the specific candle that was formed, you've got what's called the dark cloud cover. So does not complete a bearish engulfing candle, but dark cloud cover. And dark cloud covers, folks, don't they sound cool the way that they've named these Japanese candlesticks out there? I think they do. Dark cloud cover says, hey, just be careful. It's just like bring your umbrella with you. If the weather forecast is forecasting rain. Now, what we know is we've got 2 areas right now of support inside Google. Easily marked by the gap. I mean, so easily marked by the gap. You got support 1, which is the low of March 5th. That low is 828.90. What did Google do yesterday? Got to 828.81, rejected that area on lighter volume. You got test number 1 of a support area on Google. Again, the number that you're paying attention to, 828.90. So far intraday today, 829.58. 829.58 versus 828.20. Yeah. So it has not tested that low out there today. But if it does intraday and closes back up above the 828.90 level, you'll have 2 days of test, just like when we were taking a look at the Qs out there. And that's what you want to take. Now, that's support level 1. Support level 2 of this little rising window of this gap up happens to be the high of March 4th out there. So for Google to pull down into the gap and do it on a lighter volume, and the 2 benchmarks you can use for lighter volume would be the 2.7 million from March the 4th, as well as the 4 million from March the 5th out there. Then there would be nothing. Then that dark cloud cover, is not would not be a sell signal. And ordinarily, you could use that as a sell signal. I take a look at candles. I list them. I grade them. And there's different candles out there, but I take a look at a 2-candle reversal signal. That's what a dark cloud cover is. And you can use that if as a reversal if there's another pattern that's complete. Unfortunately here, other than being an oversold condition, I don't see another pattern that's complete out there. And then you always have to do your reward to risk. And your reward to risk is, well, where is it that you're going to find support if you're looking at shorting the stock? Well, in this case here, your first areas of support are going to be those gap up, those windows out there. That was on Google. So we go peek in on Apple here. Apparently I spent too much time in a dissertation taking a look at Google. If we take a look at Apple here just kind of not doing a whole lot. Yesterday, rejecting an area of resistance, so that's important. 877-927-6648. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters. The Dow up 45, composite up about 5 right now. S&P's up 3. And as we take a look now at Apple out here, Apple yesterday testing the swing point. The swing point here that we're looking at was established on January 25th. That low, 435 even Steven. And we know that yesterday you had a test. Apple got up to the high of 435.25, rejected that area. That area has 43 million shares now as a resistance. There was also another test on it the day before that as Apple got to 435.19. Now, what this is setting up, and it's really kind of cool, this helps you to identify your areas of support and resistance. Really, your polarity out here is another way to take a look at it. And if Apple goes ahead and breaks above this area, that really sets up breaking up and out to, and this would be for somebody who wanted to take a look at a short-term intraday trade out here. We know that the next area of resistance on Apple, because if you break above resistance, it all of a sudden becomes support. So as you take a look at Apple, what's cool here about the trading range that it's in, and I don't know that it's going to do this. I'm just, while we're taking a look at the chart, it's easy for us to identify. We know that next level of resistance is the swing point from January 15th, 31 million shares to the downside. We know that was tested. It was only tested once, but you got a open window. It was tested on February the 11th out there, and that is our next area of resistance inside Apple out there. Let's go to John in New York. John, thanks for calling. Thanks for holding. How are you this morning?
Okay, how are you?
Doing just great. Thanks for calling.
The junior gold miners, GDXJ.
GDXJ. Okay. Go ahead. I'm sorry, I couldn't hear you. Go ahead.
Is that a dead cat bounce, or are you done going down?
Are you in it? Looking to get in it?
Yes, I'm in it. I hit an average price of 18. So I'm down.
Okay. All right. So GDXJ. Is this a leveraged ETF?
I don't think it is. It's just
straight 1-to-1. Okay. So as we take a look at this here, and you were in around the $18 area?
Yeah.
Okay. All right. So you had nice candle formations inside the gold miners, inside either the HUI, the GDX yesterday. I mean, really, the bulls came out in fashion yesterday inside all of the gold miners. So the answer to your question, if there's ever going to be a time, the time most certainly is now. And you had big volume yesterday. Did 9.7 in the case of the GDXJ. It did 9.7 million shares out there. So this thing here truly got into a condition of being very oversold out there. So the key question is this just simply going to be a bounce to work that off, or is this a bottom that has been put in out here? So I think that you're in at around 18 or so. If we just take a look at retracement levels coming off of the island reversal candle. How about that? Here's an abandoned baby top inside the GDXJ. Folks, go take a look at September 21st, 2012. That is a definition of an abandoned baby top for sure. Your first area where this should retrace to, John, would be the $19.05 area. That would be nothing more than a dead cat bounce out there. So I suspect you will at least get that into it. I would have a stop now underneath the March 4th area, 1495. And if you don't have an intraday stop, if you see it close below that, don't write it down any further. Just go ahead and take your loss, and then to the extent that you want to play the gold miners, just come in at another time when you see the bulls step in here. The first area that this is running into is going to be the swing point from the 26th of February. That has 4.2 million shares, but yesterday's move up, as I said, was 9.7 million shares. Didn't get all the way up there, but as it comes into that level, and that level being 1628 to 1681 for you, what you would like to see is you'd like to see that area coming with more than 4.2 million bulls out there, 4.2 million shares, I should say. It looks to me like you've got it, because already today, this has only been trading for an hour and 9 minutes, is 2 million shares today. So I think the energy is behind the gold miners. So I think you're in a good trade out here, but just use a stop if you would, okay?
Okay.
You bet. And thanks so much for calling. And folks, if we let's see here, let's go take a look at Vail Resorts. MTN is the ticker symbol out here. MTN. Give me a moment here. That is having a nice. It looks like it's on the ski lift out here, and gapping up this morning, gapping up over any areas of resistance. Let's go see what this is doing. Up this so far this morning, trade out at 61.45, 198,000 shares, taking out a level here that had 1.6 million shares going back to September 25th, 2012. So let's take a look at this on a weekly chart. Then I forgot, we got that Smithfield chart. I wanted to go back, and we'll take a look at that for you. So right now you've got Vail here taking out, looks like it's taking out a swing point on price. And this is the weekly chart. We'll be doing it on volume. Yet volume, well, even if it doesn't do it on volume, it'll still move up to the next swing point. If it does it on volume, then you've got another confirmed A to B equals CD. And that's the week of September 28th, 2012, 3.3 million shares out there. So so far through yesterday was only 785,000 shares. But let's take a look at this is not a bad-looking rising price channel for sure. Let's go take a look at that. We can draw that in here. We can do a pretty good job of drawing that in on the chart here as we take a look at this. This will give us an idea perhaps as to where Vail MTN is probably headed to. I would say that is probably about the upper end of that rising price channel. And really what that says, it says Vail wants to come all the way back into, in fact, it's already inside the bar of October 5th, 2007. The low there, 61.50. It's trading out right now at 61.46, so needs to close inside there. But remember, we're looking at a weekly chart. So if it does close inside 61.50, now there's only 1.3 million shares up there. That says that it wants to get up to 66.25. So that is Vail Resorts. We can see the little moguls here that it was skiing down off of that high, though, back in 2007. And now it's just taking looks like it was taking the tow rope up for a while. And now it is on the ski lift all the way back up to the highs. Let's go back and take a look at that Smithfield stock chart out there. SFD is the ticker symbol, because on the daily chart that thing was a little bit of a rocket ship with a wide-ranging bar. But as we pull this back, we can see very clear areas of resistance set up by the different bearish candles that you've got out there. So if you're taking a look at us, if you're watching this on Tiger TV, we're looking at Smithfield Foods. SFD is the ticker symbol, and you've got bear sash candles right out here. You've got a combination. If you use you got a bearish engulfing, big bearish engulfing right here during the week of May the 6th out there. This candle here on the week of April 1st, 2011 is not a bearish candle signal, but certainly we can see the area of resistance. And interesting, today so far it's made it up to that level and looks like it's pulled back. I drew this chart here this morning during the Trader's Edge show, and now if this can break out, here's the cool thing about this, about consolidation zones. If it can't break out, then what this will do is it will likely move back to the bottom of the consolidation area. In Smithfield, that's around $17 and change. We can see that the high here of the range is at about $25. You could actually make some money understanding these consolidation areas. Likewise, you can also make money if it breaks through these consolidation areas. So if we take a look at the price projection on this, I'll just simply go ahead and use that. And this is something easy for you to do as well at home. Just simply take the measurement of the entire box, and I'll just move it up to the top here. And wow, I've got to shorten my chart. And as we shorten the chart, it says right around the $32 area. And all you're doing is taking the top of the range and the bottom of the range. And if Smithfield breaks out, instead of being at about $24.50, it'll move up to $31.80. No, it won't do that overnight, but that would be a true breakout. Much like we're taking a look at Walmart. Walmart, if we take a look at the Walmart stock, haven't done that for a while. So let's do that now. If we take a look at Walmart, we go ahead and we put this on the monthly chart out here. On the monthly chart, we can just draw that in. Now, we know that this has been in a very long-term consolidation pattern. We'll just simply, you get that bearish candle that appeared right here during the January 2000. How about that? I didn't have to go any further than that. So we got that black line going across the screen here. I'm going to make it black, and that's the top end of our range. This is on Walmart. We'll make the bottom of the range. We'll also pull that in black. I'll go ahead and pull that back a bit. And so Walmart busted out through it. It did it with volume, because the volume, quite frankly, that was taken out from December 31st, 2009 was only 137 million shares. Breaks out of that, and breaks out of with conviction, 210 million shares. Breaks out, comes back inside. Now it retests it on the month of November 30th, 2012. Tests it, then gets back inside it on December 31st. Says, maybe it was a false break topside. However, comes back really 2 months later, last month, February 28th, closes at 70.78, back above it. It does not look like to me that the Walmart breakout now was a false breakout at all. And if you take a look at what does that mean from a price standpoint, well, it means you're going from, it's got $70 all the way down to $43. So you've got, $27 with regard to the price breakout inside of Walmart. And what's an easy way for me to do that? I'll just use the old box technique. It's about the easiest way. Close enough. Close enough for my line of work. There we go. I can adjust it. And what that says is, of course, you can just do the math in your head, but really says Walmart wants to get up to about $97, $98, trading out at $73.36. So where it broke out, and broke out with conviction, came back in. It came back in really with a lighter volume there. Came back with 193 million shares going against 210. Got back inside it. So anyway, Walmart is for me, Walmart looks like it is a real breakout there. If we go take a peek in on light sweet crude, that is moving here this morning, trading up at 91.48. We'll see if this 9-period exponential moving average holds as resistance. That is about the $91.74, 91.74. It's traded up to a high of 91.73 today. That's on light sweet crude. Let's go put this on a 30-minute chart. Now, light sweet crude, you've got this little rising price channel as well that you can see. So, and as light sweet crude came back and hit that 0.618 level, and it hit it really to the T. 89.47 was the number. It got down to 89.33 out there. As it hit that area, it's possible that what this is setting up is a nothing more than coming down to the bottom of that rising price channel. You can see getting down to the lower area of that relative strength indicator. I would say if this closes above the 9-period EMA, that sets up a possible run to the upper portion of the price channel out here. Of course, that's not good for you and me. That would mean a little bit more pain at the pump out there. Let's go take a peek in here on gold and silver, see what they're doing. Silver really just a sideways day. I'm not sure if what to make of that, quite frankly. If we take a look at gold, because you can see here just really the last several days, nothing more than the sideways moving ranges. I do know, this I know for a fact, and that is the large commercials out there. That is the large group of money players. They are building their largest net short position since the lows in 2008, as well as the same period of time in 2011 out there. And if you, people like to follow the trend, following the money, the large commercials out there right now are saying that there's a major low that is being put in on gold. So I don't know what all those small-bodied candles actually mean out there. All I can do is just the facts, man, just the facts. I think that was what Dragnet. Take a peek in here on the U.S. dollar index. U.S. dollar index giving up certainly some of its gains, but volume-wise so far, pulling back with 22 million shares. That was going against 22 million shares today, and I don't have the volume from yesterday. That's a shame. So I can't go there. Let's go. Let's take a look at some of the. Let's go take a look at. Let's go peek around the world here. Haven't done that recently, so let's go take a look at the Nikkei. We take a look at the Nikkei. That was up last night. The Nikkei closing up another, 35 points. So now what we've got is, we've been talking today about some of these sideways trading ranges and consolidation areas. And I would say on the Nikkei here, what we'd be looking at is this black horizontal line going across my screen, somewhere right around the 10,891 level. And it's been consolidating there really since the time frame of October of 2008 out there. It's above the 0.382 retracement. Certainly moving into the overbought territory, but that doesn't seem to be stopping this little baby. Says that it actually wants to move up to 13,978. Closed last night at 11,968 out here. Now, let's just, use that same consolidation box technique. Let's go from the consolidation range here. Let's go from the high to the low. And if we just go ahead and move this box up here, look at what that box does. The box actually takes us up above the 0.618 level on the Nikkei. So the Nikkei here, what you'd like to see, what it hasn't done, and this would be the beautiful trade setup. And that beautiful trade setup is at some point in time, the area where the Nikkei broke out from should come back and be tested as support. Just like Walmart did, all you had to do was be patient. So the real buy probably on the Nikkei is a pullback to somewhere right around 10,891. And then holds that area. Each of us want to be all over that trade. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Master Show, folks. Dow up 49 points. And for those of you in the San Mateo, California area, even if you're not in that area, on March 16th, Saturday, March 16th, from 8:30 to 12 noon, Tom O'Brien, Daryl Martin providing a great workshop called Dynamic Trading Strategies, being hosted by Nadex. It's going to be a fun party, folks. 30 prizes worth $2,500 being given away. Your chances of winning probably easily 1 in 4 out there. So bring your friends and neighbors. A great way to spend a morning session, 8:30 to 12 o'clock. All the details on the homepage of TFNN.com. And it is winter season. Our man Mark in Mass told us that this week we're going on daylight savings time. Now, nothing could make me happier than knowing that we're going back to daylight savings time. How about, and taking advantage of time is so important, folks. And education and learning is just a key. And if you're looking for a great education, none better than by Basil Chapman this weekend. Saturday, March the 9th at Babson College. He's holding a Master Trader course. Go to the homepage of TFNN.com. Get all the details for that as well. As we come back to these markets, we're going to peek in on the Queen, on the Euro-US dollar currency pair. We can see got a nice bullish engulfing candle. Yesterday we made note of that TD combo 13 count that was made on March the 4th out there, because that is a area of strong support. It's another way to be able to count candles and take a look at them. A great tool. In fact, if you'd like to learn how to do that, I have done a entire workshop that is included in subscribing to my service, Mastering Probability. So if you haven't tested that out, got to say why. Go do that. Go to the homepage of TFNN.com. You can click on my name on that homepage, or you can do it by going to the newsletter services. Try Mastering Probability. It comes with an unconditional 30-day money-back guarantee, and it will be great trades, great education, folks, and do that today. As we take a look at the euro here, you got the bulls trying to take back control of the euro-US dollar currency pair after getting just slightly below that 0.618 retracement. A dead cat bounce here to take you up to 132.48 would be in the cards. No reason to not do that. We know that there was a strong area of support here in the euro, just simply set up by this large bullish engulfing candle from the day trading session of January the 10th out there, really setting up your support level of the low of January 4th at 1.29963. We did get a close lower yesterday, slightly lower, and the bulls have come back in, and they are in charge now. Of course, we can see that the euro getting into that oversold condition. So we'll just see if this is just simply a bounce to work that off. But I suspect to move up to 132.480, that'll be the fuel in the fire in order to be able to take the S&P up to the 1550 level, maybe 1555. Right now, trading out at 1543, and that will be the fuel in the fire. If we go take a look at a couple of the sectors, or whatever time we have left here in the show, let's go peek in on the sectors inside the S&P 500. Let's start off taking a look at the energy sector. Not really doing too much here. Still trading, though, into the resistance of the downdraft. The downdraft I'm referring to is the February 25th level. That high is 78.72. Hasn't been able to get up there. So the energy sector here showing some weakness. Of course, what's that all about? That's all about ExxonMobil, Chevron, and Schlumberger, as they represent probably about 40%. ExxonMobil here not really participating in this rally whatsoever, having really today just another sideways trading session. Folks, it's been great to be with you. Stay tuned. Basil Chapman will be up next. I'll be back with you tomorrow morning at 9 a.m. And always remember this, folks. I love saying this. You have an amazing power within yourself. And that power, folks, it's so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, I mean most of all, it creates fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great trading session, a great day. Look forward to seeing you in the morning.